Hi guys, so in this video we'll be looking at fundamental analysis. We'll try to explain what fundamental analysis is. We're going to be looking at how we can trade the news. Okay, so let's get started. So fundamental analysis is the analysis that focuses on the political, the business, the social, economical condition of a particular country in order to gauge the country's currency value. So, for example, when something is happening in a country, maybe um, maybe it is political, it could be business, it could be social. It's happening in an event happening in a country. When the event is good, when it is positive, it tends to strengthen the country's currency, and thereby in the forex market, we are going to be seeing that that country is strengthening against the other. Okay, now when a country, an event is happening in a country and the event is bad, the country's currency will be weakened. Okay, so against another country's currency. All right, now like you all know that when it is, for example, let me use the euro USD for example. The euro USD. Now, when the news is released and the US dollar is what is strong, when the US dollar is strong, what are we going to be seeing here? Okay, when the US dollar is strong, we'll be seeing more of a sell, because when you are buying the euro, you are actually saying the euro will be what? Strong, and the US dollar will be weak. Now, when you are buying the euro, you are saying that the euro will be what? Strong, and the US dollar will be weak. And when you are selling the euro, you are saying that the euro will be what? You are saying that the euro will be weak and the US dollar will be strong. Okay, so like what I'm trying to explain here, I said using the euro USD for an example, euro USD for an example, once the news is released and the US dollar is strong, once the US dollar is strong, what should you be doing here? You should be selling. You should be selling. Because why? The US dollar is strengthened. Okay? Now, once the US dollar is weakened, what should you be doing here? Once the US dollar is weakened, what should you be doing here? You should be buying. You should be buying. Okay? You should be buying. All right, do you understand the concept? So let's move on. So now when a country's currency is doing good, is doing well, it's when the economy is doing well, the economy of a country is doing well, the currency will do well. Once the economy is not doing well, the currency will not do well. So that's all about fundamental analysis. Now, one thing again, fundamental analysis should be paired with technical analysis. Okay, fundamental analysis should be paired with the technical analysis for it to really make a meaning, because everything goes in direction of the trend. So if you know market structure, this is a downtrend, this is an uptrend. Okay, this is a downtrend and this is an uptrend. Now, once you see that the market is kind of moving in an uptrend, for example, let's say the market is here at this zone and the news is being released, what I will expect that you do is that you should even look at more of buying, because you know that the market has broken the market structure, it has tested a retracement, is now having an opportunity to move upward. So now, because you understand the technicals, you are using these technicals, checking the news to also know, then move. So everything moves in direction of the trend. Everything falls in direction of the trend. So the trend is your friend. Okay. Now for the downtrend, let's say that the market was around this zone and you are checking the news, you should be expecting a sell. I want you to know that you should be expecting a sell. So everything moves in the direction of the trend. And for an advice, I will advise you more when you are trading, because the strategy I use, I try to catch hundred and thousands of pips in the future. To the future, I don't really scalp. Not the strategy is not for scalping. It's more of a swing or a position trade. Okay, more of a swing trade. So it's more like catching thousands and hundreds of pips. So the news is more of a distraction, really. So once you have done your technicals, you are using the news as a confirmation to enter your trade. So like I said, for example, let me just go to a real life example on the chart so that you see clearly what I'm trying to say. And this is my MetaTrader 5 right here. So now you can see here, this is the 4 hours time, and this is the gold USD. You can see that market was going bullish, right? Now you can see what we have here. When the news was released as at Tuesday here, the market was here, but when the news was released, we had a week. You can see a market fake out here to retest this trend line, and once it touches this trend line, it rallied up. Okay, now it rallied up to this zone, and then we had a retracement. Now, as at today, when the news was released, what you should be expecting, since the market is already going up, is an uptrend. You should be expecting a buy because the market has retraced back to this level. So you should be expecting a buy. And when the news was released, we had a buy. So that's what I'm trying to explain. That's what I'm trying to explain. So you trading the news, you should be very careful. You want to also use proper risk management, and you want to set your stop loss order so that you will not blow your account. Okay, all those things needs to be in place, and then you need experience in the market to understand how everything works. So let's move on. So some of the websites you check to see this news release is the Forex Factory, the My FX Book, investing.com, Bloomberg TV, Bloomberg.com. And for this video, I'm just going to be staying with Forex Factory. So right away, I'm just going to go to the website, forexfactory.com, and then I'm going to be explaining some few things there for you. Now, once you come to this website, you want to set it to your own time. So you click that, and then you see where I clicked here. Then you go to the time here, and then you can now set the time zone. For my format, I'm using West Africa. You can see it, West Central Africa. Then you save. Now, once you have done that, you also see the calendar here. Then you want to pick like today's date. You go to November 16th, and once you click it, you see the news that happened today, right? You see the news. Once you want to see the news that happened yesterday, you can see the news that happened yesterday in the market. You can see the news we had yesterday as at Wednesday in the market, and then you can see the news that happened today. You can even see the news that we're expecting tomorrow. Okay, so now I want to just explain something here. Now this is color coded also, like where we have low impact, high impact, and medium impact. So you see the red here, they are high impact news. The yellow here, they are low impact news, while the orange is medium impact. So the ones you want to watch out for are this high impact and this medium impact. They're the ones that normally push the market more. Now, one thing also you want to watch out here is the actual. Now, when the actual is released, if it is positive, if it is good, it will be a green color. If, like for example, the AUD USD, the AUD, and when the news was released, it was great. It was green, so it was strong. AUD will be strong. Now, once it is red, like this USD unemployment claims here, once it's red, USD is weak. Okay, USD is weak, and I'm going to explain why. So let's go see where I clicked. Now, if you come here, you see that this is the number of individuals who filed for unemployment insurance for the first time during the last week. And here, this is the usual effect. They say actual less than forecast is good for currency. So this is where you come and see the actual and the forecast. Now, before the news is released, this forecast will be empty. This actual will be empty before the news is. It is when the news is released, that's when you see the actual. So we have a forecasted this thing here. It is forecasted here. Now, once it's the forecast is here, the previous is here. So they said when the actual is less than the forecast, it is good for the currency. But what we had during the news was that the actual was not less, it was higher than the forecast. So it was really not good for the currency, for the economy. You can see it is not good for the currency and it's not good for the economy. And what we had was the red, which was weak USD. And when we had the weak USD, what we had in the market was more of a buy when you talk about the gold USD. I know I explained to you, I said when the USD is weak, we're expecting the buy. But when the USD is strong, as of the gold USD here, we're expecting the sell. So but in this case, XAUSD, the USD was weak, and then we saw a buy the upside. So that is that about the news. Okay, so that is that about the news. So what you want to do is that you want to also watch your charts. Once the news is released, you want to come to this website. You want to see what is happening. You want to take notes. You want to observe the market. I used to tell people that the success here is for you to observe your chart and understand what is happening in the market. Once you understand what is happening, now then you stand a more chance of being successful in the market. So now things that can affect the economy, like we said, politics, interest rate, natural disaster, terrorism, unemployment, exports, all these things affect the economy, affect the currency. Now, you want to watch out for this high impact news, CPI, the GDP, the central bank rate decision, the FOMC, the unemployment rates. And one thing you want to note that the central bank do not trade to make a profit. Central bank do not trade to make a profit. They trade, they have different reasons for what they do in the financial market. And one of the reasons is that they can trade to stabilize the country's currency or to improve the economy. And most of these news are news releases from the French central bank. Okay, two ways you can trade the news, like two ways you trade the news. We have what we call the directional bias and the non-directional bias, and I'm going to be explaining both of them. So what is the directional bias and what is the non-directional bias? So the directional bias is you are expecting when you expect the market to move in a certain direction once the news report is out. So you have a bias already in mind, and you're expecting that okay, the market is going to move up or down once the news is released, and you expect that the market is going to move up. So that's more of the directional bias. You expect that the market is going to move down. That's the directional bias. Okay. Now what do you do here is that since you expect that the market is going to move up, you are going to be entering the market. You have your stop loss and your take profit. Okay, that's the directional bias. Okay, already you enter the market, and then when the news is released, is either moves up or take you out. Okay, but in the non-directional bias, major news will cause big moves. So here you move with the market in the direction it is moving. So like the unemployment claim here, the unemployment that we just saw um here for the USD is a major news. Is a major news. Now, if you want to trade this news, you can use the non-directional bias to trade, in the sense that you know that major news are going to cause major moves, and when it keeps moving, it's major move, so it's going to keep going up. So what you want to do is that you want to wait for the news to be released. So once the news is released, then you now see the direction that is going before you jump in. Okay, not like the directional bias where you're already in before the news, but in the non-directional bias, there's just two ways you can use any of the method. In the non-directional bias, you know that major moves are going to cause big moves. So when you see a major news release, all you need to do is to wait for the news to start pushing in a particular direction. It can be up or down, and once it's already kicking in that direction, you know that it's going to continue in that direction. So you jump in, and then it rides with you in the direction that it is going. Okay, so those are the two ways you can trade in news: the directional bias or the non-directional bias. Okay, and I hope you understand what we just explained clearly. So thank you for watching. Have a nice day.